Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful.
Order submitted.
World's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. I've been having a hard time getting ready on time this week. You know what it is? I think it is that the clock in the shower is kind of messed up. I know that sounds stupid, but I have a hard time keeping track of the time. Now, before we go into the trading here, I am seeing my robot is doing something. It looks like it has a limit order working, and it just canceled it. So it looks to me, no, that can't be right. It looks to me like it's trying to get short, but it's having a trouble getting filled. Do I need to do something so that I can see those? Is it that I need Chart Trader on? Well, I don't know if the order is still working, so may have, But shouldn't it just always be updating it? Jiwi, hey, that's a name I haven't seen in a while. Wait, is that, but never one that was Jiwi twice. Is it the same guy or is this somebody new? Anyways, okay, well, I don't see an order anymore. So it seems to me that the strategy should be trying to go short at the moment. Which actually kind of conflicts with what I think it was going to happen. So let's come over here. Oh, it's the same guy. Well, welcome back. So yesterday, treasuries, pretty good up action. Most of it was kind of in the overnight slash not the overnight, actually, was the news, right? Okay. Then we had the auction. So the prediction I was making was you probably get a continued pop off of the auction. We did. And in fact, it kept going up after that into the close. So it wasn't an amazing trade, but we did make a good prediction there. In the overnight, maybe slightly higher, but we're getting some selling flows right now. S&P 500 gave up those gains as everybody realized that Trump can just re-implement the tariffs. Oil's kind of taking a hit there this morning. Gold, silver within their ranges. Copper looks like it's kind of completed this retracement. We'll see where it goes from here. Japanese yen maybe continuing up, and the dollar looking weak this morning. Bitcoin in a channel. Still kind of, well, it looks like they're down to 106 now. So maybe the beginning of a small downtrend. Octavia says end of month. Yes, that's why I put that in the title. So actually we should come back and kind of look at this. So what did treasuries do in the month of May? They went down. We are objectively lower than we were at the beginning of May. And where are equities from the beginning of May? We are objectively higher from where we were at the beginning of May. So this may be a case where we finally get kind of a clear situation where we might be able to predict. Oh, you're right. It's the 30th, not the 29th. Where we might be able to predict what the end of month flows are going to be. So I think the prediction should be that equities sell off a little bit and that treasuries see some pretty significant buying. So the flows being short right now kind of conflicts with that, doesn't it? But it may be yet turning up. So I'm not going to give up on it yet. Okay, so because I'm so slow, I got some food here. Should be quick. Well, that's interesting. Octavia says that there's not an MBO in ZN. I'm just realizing that we should roll over in the micro yield futures because today is essentially the last trading day in the micro yield futures. So, it should be J, right? No. M. Yeah, that's a lot better. I was like, maybe I should be taking a long here. There's no liquidity. Ah, it's because I'm on the wrong month. We could do that.
Order submitted.
Okay, so it is indeed taking a trade. And now that I have the chart trader on, it shows me. I would also say that the set stop that I have for this, which I intend to not be hit most of the time, is well outside of the recent range of action for us to take a good trade. A new Jigsaw? Is there a new version out today? Now, as to the thing, it seems to be a good option to take 2 ticks on ZN. It seems to me that if you had a 2-tick target, that at least in recent action, you would probably have your target filled most of the time. Like if you had a strategy that was, go long under these circumstances and take a 2-tick profit and no stop, that you would probably win like 90% of the time. Okay, so this one is... Did it enter the position? Oh, it did. It entered the position. And it's showing that it's down 1 tick. I love it. Okay, cool. But it did go long. Two-tick target and stop? Well, I think that's a different story. That will probably come out break even. There are some markets where even getting 2 ticks is hard. But I would say that that has not been this market. That there's been enough wiggling around that usually you get 2 ticks. And if you look at our algorithm, it usually gets at least 2 ticks. It actually hasn't in this situation. It hasn't even gotten a favorable tick yet. Go figure. Okay, hold on. I'm going to take this food back. Or rather, the plate. You had a lot more hair the last time? What are you talking about? I've always been bald. Or was my beard a little bit longer? My beard has gotten so gray over the last, 2 years. I'm actually kind of quite behind on... need to shave my head again. On the back, it's getting pretty long. Interestingly enough, I got a better position than the algorithm did, didn't I? Putin orders attack on Western tech giants. What's this? Despite tariff inflation, fear-mongering, Fed's favorite. I didn't even think about the PCE that we got. PCE price index month over month, spot 1% in line with expectations. Or PCE month over month in line with expectations. Interesting. U.S. personal income month over month, spot 8 versus spot 3. What's with that? Stocks tumble on Trump-China trade talks comments. Okay, that was the... Okay, because I was eating, I haven't really come in and, like, analyzed. That was 610. I see. And the treasuries may be sold off after the news, but this should be... I gotcha. Okay. But there may be some longs that are trapped and possibly keeping us from being able to move up again. Might be part of what's going on here. So maybe, I thought, and this might be a situation where we just get a clean call that the flow should be long because of the end of month. But now I'm realizing, no, it's not this situation. Because of Danny. Well, I see this. There's a video where in Discord where they're saying that Putin is Well, that is Putin kind of saying we should stop using U.S. tech companies, but that was like on the 26th. So it's so interesting. Okay, I got a bunch of different threads going on here. The Zen order flow has been easy to read lately. Well, I don't know about that. Like, I think that there have been a couple of really good trades, but like, I don't think that this algo has been explicitly profitable. For instance, there's been many days where it was kind of tight, where choppy. Then the last maybe 3 days, we got some pretty good trends. Okay, so there is a new version 5008 out today of Jigsaw. automatically opens several position windows. Bring the PC to sleep, makes day trader unresponsive. Fix. Okay, well. So there's that. And then, there I had this thing with a guy yesterday where he was like, oh, there's all these people that are profitable. Actually, I don't think that it really matches with the particular topic that he was talking about. Who is a better brokerage platform to trade futures? Well, so I think that when it comes to things like which software you use and which FCM you use and which introducing broker you use, there's not a explicit good or bad answer, because the market is so competitive that what ends up happening is there's a lot of differentiation instead. So it really depends on what your primary goal is, right? I think that generally speaking, the cheapest is AMP Futures and NinjaTrader. If you want like a free platform and you want the absolute cheapest everything, then you do AMP. And there's a reason why AMP is still to this day like the most popular independent futures broker. Okay. Probably like if you want cheap but you want full service platform, then it's NinjaTrader, right? If you don't want to deal with if you want to be running your own platform on anything that you want and kind of have the flexibility, then I think that there's a lot of choices there, but I have been with EdgeClear and I really like them. Iron Beam, so they have a pretty good setup. I don't think that Iron Beam's platform is nearly as good as NinjaTrader's, but you do get up and going faster with Iron Beam. That's for sure. Ninja owns Tradeovate now. Yeah, so then there's the web platforms. I actually think there could be an argument to be made that the Iron Beam's web platform is better than the Tradeovate web platform. Like, Tradeovate / NinjaTrader web is definitely more mature, but I've seen a lot less problems and complaints with Iron Beam web than I have with Tradeovate. I've seen so many complaints about NinjaTrader web that it makes me surprised that anybody uses it. AMP does not support Ninja. No, it does not. If you want to use NinjaTrader, you have to use NinjaTrader brokerage now. Over the years, they've changed things to the point where you basically they make life really, really irritating if you're not using NinjaTrader brokerage. Hey, how you decide to trade futures instead of, for instance, doing swing trading on stocks if you tried both styles and decided based on results? Well, okay, so if your objective, what is this? Hard is naming. If your primary objective is max capital gains, I'm gonna just tell you right now, don't day trade, don't swing trade, just buy and hold. Buy and hold a mixed portfolio of 5 to 10 stocks with some stocks that have high beta or are speculative. Mildly speculative, let's say. Okay. You're going to make more money on that than you are from day trading. And then probably your next best option after that is probably options trading if you have the money. Okay. Swing trading, you can be successful with swing trading. I think that most retail traders, when they swing trade, they will make money, but they will not make as much money as they would if they had bought and holds. Especially not like on a risk-adjusted basis. You end up taking a lot of risk and a lot of effort, and still just get a return that's like on par with the S&P 500. It's kind of like, ugh. Okay. Day trading, well, it's incredibly difficult to be successful day trading. Always point back to this study in Brazil. I've been thinking about this study in Brazil where 95% of futures traders lost money. Been thinking about that one a lot. I think part of it is that it's Brazil, and so there's a suggestion that the futures markets in Brazil aren't very fair, which I think is true to some extent. But the thing that people forget about in that study is that the people they were looking at had persisted for more than 300 days. So they were not saying like of everybody that ever tries trading, 95% of them fail. No, they're saying that of everybody that tries day trading and tries to trade for more than 300 days, 95% of them fail. The odds are very much stacked against you for day trading. And that's why, even though I've had some periods of success and I continue to be doing pretty okay, although I have not really taken very many trades in the last 6 months because of personal circumstances. But even when I'm doing well, I am still very risk adverse. I don't take huge shots, because I understand that what we're doing is incredibly hard. Our edge is based primarily on it being informed, having an understanding of the market and knowing things that other people don't. And so that kind of means that your edge isn't going to be always consistent. It's going to depend on how well you understand that market, right? So that's why I say, just based on your question, like, did you do these different ones and like compare them? Well, if you're going to compare them, almost always buy and hold is going to make you more money. Okay. So why do I do futures trading? Well, because I want to be involved in the market, because I want to know what's going on, following every trade and every move that matters to the markets, and understanding the flows and understanding the market in general. And day trading futures is, in my opinion, the best way to understand the market and what's going on in the market overall. I have an interactive broker account, but I don't like the TW platform. It is clunky. I've only tried that once, and I was like, this is a nightmare. Ninja Trader ought to change your name to Freeze Trader. Oh, I don't get that. I will get a chart freeze. There seems to be this issue where if you have something that's doing multiple data series, there seems to be a we could say this, like a multi-threading issue where every once in a while that individual chart will get stuck. But a problem with certain custom indicators, not necessarily NinjaTrader. If you're just using NinjaTrader out of the box and it's, quote, freezing on you, there's something wrong with like your system or like what you're doing, because it's not typical for NinjaTrader to do that. Well, they came up a little bit for a while, but it's been kind of tough going here. I think that I should just, well, of course, if we break, I can like stop out of it. But for this sim trade that I took, I think that I should just try and hold it until the end of my session, at least. The problem with buy and hold is a lot of people can't afford to have money sit without tapping into any profits. Okay, listen, if your goal is to live off of trading the markets, I would just give up on that dream right now. It's extremely unlikely to work. Even if you get it to work, it's kind of a shit setup. Whenever that one comes up, I just come back to that thing that Andreas Kleinow says, right? That like trying to live off of your profits from trading is kind of a bad trade. It makes you a bad trader by definition, because it's just like a really difficult deal. Like, in order to make enough from your trading profits to have like a middle-class lifestyle, you have to have a really big wad of cash for starters, and you have to be making insane profits. So it really is a bad trade. If you want to live off of your trading, then your goal should be to manage other people's money. But if you're already rich, you've already got a good amount of money, and you're a loner, you're at home all the time, you love to read the news, you love to read the internet, you're at your desk at a computer all of the time anyways, then day trading can be a rewarding thing. And, you know, these different forms of trading and so forth. You know, so if you're not going to be at the desk all day, but you really follow the market closely, and you're still willing to spend 10 to 20 hours a week researching companies and following the market and stuff, that's when like buy and hold it can be really, really great. And you're not going to live off of it, no, but it can really, really expand your wealth. Yeah. Jiwi says there's like 4 people in the... By the way, what was... I'm just realizing that his name is Blue. Because it's been such a long time since I've seen your name. But we were doing that years and years ago, so... Yeah. So would you say that most winning retail traders are just on the right side of variance, even those let's say those taking part in something like the, wait, I don't know what you mean by the USIC. USIC. United States Infrastructure Corporation? The financial competition? Minimum account size is 1 million. Have the day off. Oh, I gotcha. Well, I appreciate you thinking of me, man. You know, it's easy to forget how much of a part of our lives this stream is, man, because we're here every day, right? The United States Investing Championship. Ah, gotcha. Okay, so the most of the guys that are doing these like championships or contests, there's two categories of this, right? Some guys are really just swinging for the trees, right? There is that. But really what that particular competition, as I understand it, was intended for was for momentum traders to compare each other, right? So, because what I'm seeing here, this is the one where like minimum account size is 1 million and that sort of stuff, right? So momentum is a different, completely different bag. Okay. Because we don't have the money to really do that sort of a strategy. So, but the heart of the question was really like, are winning traders just on the right side of the variance? So it depends on the type of trading that they're doing. But when it comes to retail day traders that are telling you they are profitable, they are almost always, yes, just lucky. Like, show me a retail day trader that has a 5-year track record. Nobody has ever shown me a 5-year track record that I can verify. It's never happened. The only person that ever came close was Warrior Trading, and we think that he's just front running his audience. So, and most of the stuff that you're going to see online, it really is a case of, I want to do well and show people that I have done well so that I can sell my other services. So you kind of got to be a little bit suspicious anytime you see people online telling you how much money they've made anyways, right? The commercials I'm seeing during your live stream are saying how easy. Oh, that's hilarious, dude. I haven't seen commercials like that in a while, so So I have a Monte Carlo backtest where essentially every day it picks a random time to take a trade, and then it holds it for like 30 minutes or something like that, right? So you're just exposing yourself to 30 minutes of volatility once every day. And then you do that thousands of times. And what I find generally is that 30 to 40% of the iterations come out profitable. So just by if you have a purely random strategy, the numbers, according to Monte Carlo simulation, is that 30 to 40% of retail day traders will make money. But we find all of the statistics in any study that we've ever seen done on this show that retail day traders do significantly worse than that. What's with that? Right? Well, I think the really big one is that my Monte Carlo simulation, it goes for a year, but it only takes one trade a day. And most retail day traders do way more than that. And so really what happens is the more trades that you take, the greater the chance that that account fails in a Monte Carlo simulation, right? And so the reason that retail day traders fail faster than that is essentially they do not have an edge and they overtrade. They trade so fast that they never get to be in that category where after a year they're in that 30 to 40%. Essentially, is what happens. So that's for day trading. Okay. If you get into swing trading again, swing trading, because swing trading usually involves trading stocks, most stocks move up. Most swing traders do overall make money. but they don't make money on a risk-adjusted basis. I don't know. It's like a pro athlete and telling a kid, don't chase your dream. No one makes it, yet there is an NBA every year. Obviously, some people make it. Yeah, but does it cost you tens of thousands of dollars of your own money to make it into the NBA? And you have to just continue putting money into it as long as you're trying? Well, I guess high school sports can be expensive, but I think that most people that get into the NBA, they do it because they love playing basketball, and not necessarily because they thought they were going to get into the NBA. But then, like, they find out that they're good enough at it, or that they have those advantages. You know, like if you're 5'9", if your brother came to you and it was like, hey, I want to be in the NBA, just like randomly out of nowhere, and they're like 5'7", what are you going to tell them? Go for it. I believe in you. No. It's a poor metaphor because less than 0.001 of the population plays in the NBA. Well, I don't know if that makes it a poor metaphor, because I think that the success rate of retail day traders is probably pretty similar. But it's just like, if you're in the NBA, I can tell you certain things about, you know, you're going to fit certain physical character. You're probably going to be unusually tall. You're going to be athletic. Like, there's not everybody can be in the NBA. There are some people where your body is just not very good at being in the NBA, right? And then it's very, very unwise for you to try and get into the NBA, right? The whole thing is that we adapt to different things. Some people are adapted to playing in the NBA, and some people are adapted to sitting in front of a computer all day, like myself. Okay? Like, very, very few people can sit in front of a computer all day and still be super skinny like I am, right? I have some weird genetics that makes me better suited to sitting in front of a computer all day than other people do. Okay. There needs to be a variety, because we don't know what the future is going to hold for the human race. And so we need to have this wide genetic pool so that we're ready for whatever comes. Right? And so part of the game of life is understanding what kind of gifts and advantages you've been given and working with those. And or compensating for the places where you're weak. Right? So, and it is the same with day trading, right? So like the first one is do you have a lot of excess capital already? If you don't, you're probably not going to be a successful day trader. It's just telling you. It's pretty hard to just start with $1,000 and then turn it into I've never heard of that. Well, I think it probably happened, but that's pretty hard. The people that I have seen that have been successful with this, they started with a really big wad to begin with. I don't think that's true, Pig Iron. The odds are very slim that you make it as a day trader and leave it at that. I think most people understand that. But that's the thing. Most people don't understand that, Pig Iron. Most of the people that you see coming through the day trader community, and talking have been given a false idea, a false expectation about what day trading is and what you can expect from it. Most people come into this space because they came across some influencer selling them a lie. So maybe they really do enjoy this and they want to get into it, right? First, we have to tear down the illusion. And once you kind of know what the realistic thing is, now you can work towards the realistic thing if you realize that that's for you. But in order to do that, we have to pull the illusion down. I'd rather spend my whole life trying to succeed as a trader than make millions doing something I hate. Well, there you go. But so here's another question. So this gets me into a different point though, because most retail traders are just trying to trade with the chart. And I'm sitting here like, do you really actually enjoy watching a chart all day and looking for a certain pattern? Do you really actually like if there was no money in that, would you really just sit there all day and analyze charts? I don't think anybody would. I don't think anybody would. If there was no money in it, I would still read Zero Hedge. I would still read CNBC, right? The market itself is interesting. Charts are not interesting. Or who I don't know, what would be a different kind of data that somebody could look at, you know, like I'm not going to say that there's not going to be any people, but I bet you that 95% of people that are chart traders would never look at a chart in their life if there wasn't money involved in it. I really don't think that most people know that the odds are stacked against them. I really don't. Because I've never met a beginning retail day trader that had realistic expectations. Like, the reality is that even amongst the retail day traders that have been at it for a couple of years, we tend to find that they have unrealistic expectations and that a lot of their failure comes down to those unrealistic expectations. There you go. I spend most of my time looking at time series in Excel, but it's fairly similar. Well, but then that's maybe even different because Excel can be fun. Like making formulas and charts, and that's a thing for some people. But that's different from looking at a chart and waiting for a certain thing, you know? So it's kind of, I don't know. But that's like the ironic thing is everybody comes in and they want to just do chart trading, which is incredibly boring. It's also incredibly ineffective. For day trading, it's incredibly ineffective. Okay, so that reminds me, somebody had sent me this email. Well, they actually, they commented on a video and I was going back and forth with them and they were like, oh, but there's all of these websites where you can go and look like K-Info and you can see these leaderboards of people that are having success. And here's all of these people that claim to have profits. One of them that they mentioned is somebody that I've run across before. And I think that they are just they were an absolute charlatan. They were saying things that didn't make any sense. In particular, no, I will just tell you who it is and I'll tell you this story because it's on Reddit. You can go find it. He mentioned Adam Grimes, who wrote one of the most revered technical analysis books of our day. And he was just completely full of shit. Like, he was like, oh, don't do back testing, essentially. So, man. And he said a lot of things that was kind of like, it seems to me that he does have a firm of some sort that makes money. They're probably running some sort of a momentum strategy, but he's not teaching you what makes him money. You know? Those with unrealistic goals get checked real quick with a blown account. No, because it's so here would be an interesting study. When a retail day trader blows an account, and we should put like some really clear definitions on what is a blown account, right? That the account draws down so much that in order for you to continue trading, you have to add more money into the account. Okay? If a retail day trader blows the account, does it change the percent chance that they will blow an account again in the future? In other words, we should be able to see that, like, the number of when a person has a blown account one time, but they continue trading, that the percentage chance that they blow an account a second time is lower. I'm going to bet you that it's not. Like, it's just this weird thing that, and I think that, well, I could be wrong about this, but I really blame the prop trading companies, the funded trader companies. I think that they give people unrealistic goals and expectations. But what I find is that generally retail day traders are looking for hits that are just much larger than what would be realistic to actually pull from the market. Anyways, so for this guy, I have to ask him, hey, have you watched my video on momentum? Because momentum is a thing. So he was commenting on the video about that price is BS. And I think the thing that he's not understanding is that it is true that current prices do not reflect all available information. It is also true that current prices is not predictive of what future price will be. You cannot come in and look at a chart of an individual asset and make an effective prediction about where that asset is going to go. Or even this idea that, like, I can come in and, like, if I do it 100 times, I'll win 60 times or something like that. It's just, these don't exist, okay? But that does not conflict with another true statement, which is that some types of assets have a tendency to trend over very long time periods. That's also true. So, momentum strategies are essentially strategies that take all of the prediction out of it and are just designed to take advantage of that tendency for markets to trend over very, very long periods of time. It's kind of like, say you're playing baseball. You're not going to swing at every ball because the pitchers will throw balls and things like that to kind of mess you up, right? But what if the game wasn't like that? What if the game was you just get to go to bat 1,000 times, and if you hit a home run within that 1,000 times or whatever the number that we give you, if you hit a home run once, then you win the game. Then what would be the optimal strategy in that situation? It wouldn't be to watch the pitcher and try and figure out where he's going to throw it to decide whether you should swing at the ball or not. No, the optimal strategy would be to swing every time. That's what a momentum strategy is doing, right? So when we're having this discussion about technical analysis, you kind of have to understand and separate out what momentum is. Because there are people that have made money from momentum strategies, but that's very different from what most chartists are trying to do when they just look at an individual stock and say, I think it's going to go up. Plethora of live trading streams out there as proof that folks are aware of the stacked odds? Well, maybe. I mean, I do think that most people tend to understand at some point that it's hard. And I guess the issue is that you're maybe talking about a different group of people, right? Most people that come in, and most of the people that are like new to my stream, they have to understand that first. Okay. That's only step one. And then there's all sorts of other things that we kind of have to go through in order for people to even stand a chance. And most people never learn these other things. Okay, so let me write this. Have you watched my video on how momentum strategies work? Just stating my belief. Okay. But let's take it a step further, right? Some percentage of retail day traders understand that their chances of success are slim. Even fewer understand why. And that's also an important thing for people to understand. So once you understand both the random nature of the market and the competitive nature of the market, now we can go about looking for strategies and advantages that can help us overcome those, right? And most retail traders, they don't understand that. And so all they ever do is they just chase after pattern, whatever pattern people are talking about on Reddit. And they're never able to develop their own strategy that ever has an even reasonable chance of actually working. They're digging in the wrong spots. That's weird. I just did like a copy and paste, and what was in my clipboard was like from 3 days ago when we were doing the video cards I had and stuff. Jiwi says every sea in Pacific Ocean is pronounced different. Wow, man, how have I never heard that before? That's crazy. Like, well, so pig iron. The thing is like, okay, why are we questioning it, right? I think the reason we're questioning it is in as much as we're questioning why Seth is talking about it, right? So Seth is saying the reason we talk about it so much is because a lot of beginners come in and don't understand that. And then two, a lot of beginners come in and they don't understand why, and understanding why is a crucial part to being able to develop strategies that will actually give you a chance. Once we have those two things out of the way, this would be like my process here. Okay, hold on. Clear this out because I don't need that anymore. Wait, am I using the big one? No, I'm not. Okay, step one. Step one. Understand the probability of success. So not the probability, that the chances of success are extremely slim. And even if you do win, the reward is not always great. Okay. There are some people that make like billions of dollars, but most people, they don't. Well, not billions, but let's say millions. I don't know if I've ever heard of somebody becoming a billionaire from day trading. Maybe from asset management, but not from day trading. Okay. Two, understand it's hard because market is competitive. Okay. So strategies that work can stop working because too many people are trading them. Or we could also put it as alpha decay is a thing. Right? Okay. Now we can get into proven properties of markets. Number one, markets are statistically efficient. Markets are not informationally efficient. Okay. Which markets are statistically efficient. That means past price history does not predict future very well. Markets are not informationally efficient. That means current price does not reflect all available information. Okay. Number three, some assets have had a tendency to trend over very long time periods. Okay. And then once you start to get into, okay, there's those flows, and why is that so? And then you get into order flow. That's essentially how we come to order flow. And then we can get into the that there are predictable flows and order flow. Put it that way. There are. Oh, can't save with no pass set. That's funny. I always automatically do the colon W at the end of a sentence to save things. Yeah, there are predictable order flows, right? Okay. My conclusion based off of all of this is be informed about the market and look for opportunities to predict future order flows based on your knowledge. And that's my conclusion. And that would be if you want to day trade. If you want to day trade. This is what you got to do to even stand a chance. Right? And from what I've seen just from talking to people and what sort of things people will argue with you about and so on and so forth, nope, most people never get past point number 2. Sticky notes and word patter for losers. Helix is an amazing text editor, guys. Everybody's all into NeoVim is the popular one, but I think that Helix is better than NeoVim. Fixes all the problems with NeoVim, gives you a really solid package out of the box. If you want maximum flexibility, I guess it's still NeoVim, but NeoVim is propaganda meant to hold you back, but using a command line text editor and doing all of your work with the keyboard, that is not. There's a real advantage in that. And we go further. Okay, wait. Gundriver asked this question 2 times now. We should talk about that. Have you played around much with Treasury's spread trading? So there have been a few times where we've tried taking some spread trades in the Treasuries. And generally speaking, we have found that it is very difficult to day trade these spreads. At least with kind of the way that I try and day trade. It's hard. It's hard for me to predict when the spreads are going to move in which direction they're going to move. So, now swing trading spreads is maybe a different story. So I think there's one side is you can swing trade spreads. I think another side is you can probably arbitrage with spreads, but I've never tried. I think you would want to make an algorithm to do that. Okay. It's kind of interesting, by the way. Well, we had this initial piece of news, which was Donald Trump kind of talking about trade with China. Didn't sound like it was going very well. And then we had this news. So I wouldn't necessarily expect these lines to be very effective during those. Although it is curious that in this, normally you would have a situation where if it were to come all the way back, it would bounce there, but it didn't do that. But then when we did finally get a long flow that I think was just kind of endogenous, you get that right there. Came up to it, to the tick. Wow. Okay, well. And that's the third time this week, I think, that we've seen where that dotted line stopped it to the tick. Kind of interesting to watch. Okay. Coming back over here. I've seen this trend on TikTok that's like, here's propaganda that I'm not falling for, yada yada yada, right? Funded trader programs. The targets they set are unrealistic and intended to keep you trying to pass the program. Funded trader programs, the targets that they set are unrealistic and are intended to keep you trying to pass the program over and over rather than to actually help you become a good trader. That's propaganda you shouldn't fall for. Price. Current prices do not reflect all available information. Here's one. Tell me if you've heard this one before. Most funds don't outperform the market. This is propaganda. Most funds are not intended to provide alpha. They are primarily looking what should I say? The product they're trying to sell. I'm trying to find like the shortest verbiage that I can use for this. Tended to provide uncorrelated returns for diversification. Okay. When you say randomness, you'd have to define what that in your terms. Did I come up here? Markets are statistically efficient. Past price history does not predict future very well. So there's kind of this strange kind of more philosophical argument. I mean, there's a couple of places where maybe philosophy and physics potentially collide because there are questions that presumably we might be able to explain with physics at some point, but it's way far beyond our current science. And so it becomes a philosophical question, right? Is there any such thing as truly random? Some people believe that there is no such thing as truly random. There's just things that are too many variables and so forth for us to be able to predict. Isn't that a point often brought up that they do it randomly? Well, you can come in and you can say, for instance, like when a index fund does their end of month rebalancing, there's no informational content in those orders. I mean, I guess the informational content behind those orders is that that fund needs to rebalance. But there's nothing about those orders that tells me anything about the fundamental state of that stock or of the market as a whole, right? So from the perspective of, you know, somebody looking at the market fundamentally, using the price to try and figure out where the market is at fundamentally, those orders are, for all intents and purposes, random, even though they don't place them randomly, right? It's just the things that are causing those orders to come through have absolutely nothing to do with the things that you're looking at or that you care about. And so that's all often when people say that it's random, what they really mean is based on the pieces of information that we care about. These orders or this thing has absolutely nothing to do with those. That doesn't mean that that there's not some reason or cause behind it. It's just that the cause is outside of the scope, right? The thing is that a lot of orders are submitted for just like, I feel like it, you know? So yeah, no, logic says no institution is randomly dumping millions. But it's within the scope, right? Because the whole issue is that people are looking at the price to say, price moved up. That must mean that the stock is worth more now. Well, no, not necessarily. Because there's lots of reasons that institutions do things that have absolutely nothing to do, and that's the thing that you really that I'm trying to these 2 points right here. This is why these 2 points are so important. The market is not informationally efficient. Current price does not reflect all available information. In our day and age, in our markets, the majority of orders submitted do not have anything to do with the fundamental value of that asset, but rather just money being allocated into the market overall as a whole. Index funds are the largest, biggest, most important players. And so what determines whether that money comes into that stock that month from the index fund is determined by how much money was placed into the fund, how much money was taken out of the fund, and how much that asset moved that month and is require rebalancing. So you can't just come in and say price moved up. That must mean that the stock is worth more. Instead, what we have to do is we say the stock is up because the order flows favored longs. Then we can break it up into what order flows. Well, there was index funds rebalancing for the end of the month. There was people that were taking trades based on what Donald Trump said about negotiations with China, trade negotiations with China, right? I can split all of those up and you know, if I have a really, really good model of the market where I understand enough of how the different flows work and will react in that situation, that's when then you can create very effective predictions. Interesting the point on what information an order contains, and it's true that different observers could read different info from the same order, hence the lack of credibility of the chart reading. Yeah, well, and the issue is, again, there is a reason why that every order was submitted for a reason. But we might never know exactly what the reason is for an individual order. But what we do know is the general reasons why orders are submitted. And our modern understanding has kind of come to the conclusion that because there are so many different reasons for why people submit the orders, you can't just come in and read the change in prices as some indicative of what the fundamental value of the asset is. Well, it's time for me to get going. And the only thought in my head is I really like wearing linen. It feels so cool. And I need to make my lunch. But, well, this was kind of fun. I think there's some more propaganda that you shouldn't fall for, but I don't know what it is. The context of what was relayed to me was if you see big orders in a market, you should take note. That's all, because that big order is anything but random. No, I would not present that at all. So, okay. If you see a big order, there's two reasons why you see a big order. One is because somebody fucked up. And two is they're trying to trick you. So big orders are interesting to take note of, but I would read them more as context rather than a predictive thing. And generally speaking, I find that it is best to avoid the big orders. Okay, we are about to get some news here, so we'll let that come through. A little bit of a long. Yeah, maybe not. And just take it off of there. The robot is still long. Has it really been... It hasn't been in for an hour yet? Well... It looks like it took some... I think that I never turned it off yesterday. So yesterday it took a trade and it made 118. And then today it took a trade and it's made 4 to 7 ticks. Now, I don't remember when it was filled. Was time 6:47. Okay, so that's interesting because it should be out of it by now. I'm just going to leave it and see if it takes it out, but there might be, we may have introduced a bug that somehow the news thing and everything else is interfering with the mechanism that makes it get out after an hour. So... All right, guys, I got to get going. I will see you on Monday in June. Then we'll be into full summer trading. In the meantime, stay excellent, team.